Welcome to the Seattle Investors Club podcast with Julie Clark and Joe Bauer, where we share the nuts and bolts of real estate investing from our 20-plus years in the industry. Sit back, relax, listen, and immediately take action. Are you ready? Here we go.
Welcome to the Nuts and Bolts of Real Estate Investing podcast. My name is Joe Bauer, and I'm here with my co-host, Julie Clark. Julie, how are you today?
I am good, Joe. I'm actually in a different location today other than my kitchen island. I am at my office in Bellevue, which I come to like twice a year. So I wanted to get all official and professional about it since we have the awesome Tucker Merrihew with us today. And actually, that's not true. I just had a great appointment over here in Redmond this morning. So I'm multitasking, slammed in here about 10 minutes ago. To talk to you two fellas. I'm looking forward to this one today on a selfish level because I know Tucker has all the goods on direct mail and stellar investor insider info. So it's going to be a good one today. Where are you at, Joe?
I am in Cookeville, Tennessee, and I'm going to be headed up to Mammoth Caves in Kentucky here in a few hours.
Wow. What time is it there? Are you 2 hours, 3 hours?
2 hours. We were 3 hours yesterday, and then we jumped to 2 hours. So I gained an hour. It's awesome.
Nice. Awesome. I've never been to Tennessee. Maybe you'll let me know how it is. Maybe I'll get there someday. Who knows?
So far, so good. The people have been really nice, and it's just kind of laid back here. Although the weather is cold and rainy right now, like 35 and raining.
Isn't that like hurricane or what do you want to call it? Tornado alley out that way?
That I do not know.
What would be interesting? Sorry, now we're all getting off topic, but hey, everybody, how you doing? All these crazy storms that have happened out away from the West Coast. It'd be interesting for you to go get a little taste of eyewitnessing some of that devastation because I feel like we're so sheltered out here in some ways, aside from the fires that we're having, which is another issue. But, I think it's hard for us to understand what people out in the Midwest and those places go through with all those devastating hurricanes or tornadoes or whatever they are. Sorry, guys, I'm getting all emotional on you this morning. But anyway.
Yeah, totally. We're going to be headed out towards Florida area in the next few weeks. So I'll definitely have some eyewitness stuff to share with you and everybody else. We'll get some pictures for you and all that fun stuff.
And where just as a reminder, where can everybody follow all your fun travels?
Yeah, pretty much just about anywhere that you type in The Fantastic Life. You can follow us on all the fun social channels or our website. And man, if you didn't check out that sunset that I saw last night, holy smokes, you guys should check out the Fantastic Life on Instagram. Is like the most vibrant sunset I've seen on the whole trip.
I saw that. Well, I'm going for my transition here. So speaking of not fantastic, but fantastic and vibrant, how about that? We have Mr. Tucker Merrihew with us today.
Yeah.
And some of you may have already been a part of Tucker's world. Locally here in the Seattle area, he was one of the speakers at our buddy Tarl's Big Ass Real Estate Expo or Big Badass Real Estate Expo, which was that this year? I guess that was this year. Or maybe this is the second year he had it. And Tucker was one of the most coveted speakers to pack the room at that event.
You'll make sure to tell him that again, right? So I don't get over slots this next year.
Yes, I will. I will remind him of that because he's going to be hanging out with us here at our little holiday party in a couple weeks. But Tucker,
he had me host a couple panels on Saturday, but then he gave me the solo stage on Sunday morning after the VIP dinner, and we all know what happens at VIP dinners. So
that's right.
Yep.
That's right. Well, hey, just as a special invite, if you feel like coming up to Seattle and hanging out with Tarl and some of our other buddies, we'll send you an invite to our Christmas little party. It's on a Thursday evening coming up, just as a be awesome if you wanted to pop by if you happen to have any reason to come up here. But For you guys who don't know Tucker, Tucker is the owner and head of acquisitions and finance manager and everything else in between for TTM Development Company out of Portland, Oregon. He is also the founder of the Driving for Dollars app, which is totally badass, and we use it. We'll talk a little bit about that today. He has his own stellar podcast. Actually, we learned from him, no doubt. It's called The Real Deals, DEALZ, with a Z on the end of it. You guys want to definitely check that out. He's also the founder, I'll say founder, you can correct me if I'm wrong, Tucker, of the Deal Finders Academy, Deal Finders Launchpad, which is more of an entry-level program for coaching for investors. And he's even an author of a book, right? I see your ebook there. Direct Mail Millions. I'll be reading.
Yeah, that's our little, get
little
into my
hook.
world bait. But there's a better book that I wrote. Well, the Direct Mail Millions one is good for making money. But for entertainment, there's a book called The Dirty Truth that we wrote that is the top 10 most bizarre, disgusting, weird, strange, entertaining seller appointments that we've ever been on over the last 10 years. And I can send you guys some hard copies of them as a thanks for having me on the show.
That'd be awesome. Because what we do at our Seattle Investors Club meetings is we actually, whenever we have somebody on the podcast that's written a book, we actually give those books out at the next meeting.
Well, I've got a stack I can send you guys up, but it's myself and Chris, my acquisitions manager. We sat down one day and we were like, you know what? We are spitballing these crazy stories all the time of like, remember that one nut job and remember that one time? I was like, we got to write these down and like remember them before they disappear into that, part of your brain that you can't remember anymore. And so we wrote down a whole bunch of them, and then we kind of brainstormed all the details of how they actually played out. And then we, at the time, had a guy in the office who was an aspiring writer, and he kind of took all of our notes and weaved them together, and he created a cool little book on it. So.
Oh, that is totally awesome. I can't wait to read that one. We when we go on our appointments, I feel like we have so many appointments and I forget people's names, so I give them little nicknames. That just crack. We just crack up with these. It's probably not the most nicest thing, or something that we just trying to do it to keep our lives funny and hilarious all the time. And but that's a little fun thing that we do there. But I always thought about because we record all our calls are recorded, some of the funniest stuff, right, on the messages and the calls that we get, people, trying
it's funny you gave them a nickname because we a couple of the chapters of the stories is Captain Ron's house, the Golden Girls, Lord of the Undies, the Keeper Sutherland house. There's all kinds. So anyway, I gave them nicknames too. That's how we remembered them. So.
That's how I remember them. I love it. It's hilarious too. And then I can never remember their real name, and I'm always worried I'm going to go back in the house and totally F it up and call them by the nickname, while I'm there.
Well, fortunately, these guys are all in the rear view. Some were houses that we bought. Some were just crazy appointments that we went on that will forever leave a mark in my brain. What I saw, but
gotta keep it real, guys. Gotta have some fun in this business. There's a lot of funny stuff that goes down.
You see some crazy stuff, especially when you remove the intermediary of the MLS. That's for sure. So. That's
right. Well, I want to give a shout out. One thing we left off the list here, I'm sure many things we left off the list, but we want to give a shout out to your other show, the Portland Real Estate Podcast. And for all you brokers and investors listening, that'd be a good one for you to check out as well. So let's get started. We kind of have a standard question Joe kicks us off with as we deep dive into Tucker and everything he has to offer and what he's all about. So Joe, kick us off.
Yeah. So Tucker, what we like to know about people with this first question is basically how you got from, your very beginnings, where you grew up, all that fun stuff, to today. So what were the things that made the difference and, the weird life changes that shoved you into, let's say, entrepreneurship or real estate investing or whatever it may be?
It's funny you asked me that question because I just finished recording this week's show for Real Deals, and it was a topic that I didn't want to touch for a while, but I said, fuck it, let's do it. And the topic was basically, are you messing up your kids with your own success, right?
Oh my God. So
And I really dove into it because I've seen a lot of things, and it made me reflect back on my life and kind of why I feel like I'm where I'm at, and comparatively, why other people are where they're at. And specifically people I grew up with or people that I knew that had a lot of means or opportunity or whatever. And, I honestly, when I first grew up, we were not very well off. I mean, the house that I lived in was, I think my parents paid 11 grand for it. And it was sandwiched between a transformer station and a crack shack on the other side. And so it could literally fit in my garage today. But when you're a kid, you don't know the difference. So it's not really a sad thing or a sob story because kids only know what they know, right? But it was definitely known within the house that, if you wanted something, you had to work for it. And we didn't really have a lot of means. So there wasn't going to be a lot of luxury items. So at a young age, I, had that desire or that hustle muscle that kind of started to develop early on that I think a lot of kids don't, because they, things are handed to them or they just don't have to work for things nearly as much. And so that's kind of how it started. I always had an affinity towards entrepreneurship. My grandfather started a business and he was very much, an entrepreneur, the only one in the family really. And we had a pretty strong connection. And so that kind of helped foster me along in that arena. I ended up going to college to play lacrosse and kind of party and hang out and, do what college is meant for. And when I got done with that, I had two options. One was I could have gone and worked for a big company by the name of Merrill Lynch, but fortunately they retracted their offer to me last second because I went through like a multiple interview process.
Yeah.
And they offered me the job after two interviews, but there was like a third interview that was a phone interview. And I still remember the question that I think I screwed up, which is why they retracted the offer, but it ended up being a great thing. But they asked me if I was in a social setting, would I do everything that I could to try and make sure that everybody knew what it is that I did? And I thought about it and I was like, well, I was basically going to be a minion for them. I was like, I don't know, maybe, I guess it depends on the conversation or whatever. They didn't like that. So they retracted the offer. They basically wanted somebody that was going to spread the gospel and try and get them in front of as many people as possible that had money to invest with them. And so basically they retracted their offer and I was left in the last semester of my college career, now not knowing what I was going to do, because that's really what you go to college for, to try and get a job, right? Or that's the way you're conditioned. And so that kind of pushed me back into the entrepreneurial side. And so I was like, well, maybe real estate's a good way to go. I know a lot of people make a lot of money in that. And so I dove into the mortgage side of it. I was actually looking.
Were you after the money or you actually liked real estate at that point?
At that point, I didn't know.
Charles says he doesn't actually even like real estate. I always find that interesting,
I find it interesting when people say that. I will tell you this. At first, it was all about the money. Now, I actually do like real estate a lot. I love real estate. And so I think that's why, there's differences in the way people's businesses operate as they kind of grow and they climb the real estate ladder and they do different types of projects. We wouldn't do the projects that we do if I didn't love real estate. It would be much more like cut and dry, conveyor belt, bang them out type things if real estate was just a means to an end. But that's not what we do. And so it started off, totally honest, is the money. They had I think I went to like a Robert Allen seminar or something like that. And, they obviously parade around the big checks and the deals on the screen that, people made all this money. And of course, me as a 22-year-old kid, that drew me in right away. But that was a little bit farther off in my future before any of that became real. So I started at the only place that I could, which was a mortgage company that basically said that they would hire anybody. And looking back now, I know what their game plan was because I owned a mortgage company eventually down the road. They basically would hire anybody. They'd train you for 2 weeks and then they'd set you free into the world and say, go find mortgages. And they would basically take 30 or 45% of your first 3 loans plus a processing fee. But they assumed everybody had friends and family that they could utilize to do their first mortgages with. So it was like this big kind of conveyor belt of bring them in, crank them out, and then they fall off. And so they ran these classes constantly to up their own production and take essentially half of the commissions that these mortgages would create. And so I just happened to be one of the guys that stuck. And a couple years later, I was one of the top producing loan officers within not only that company, but another one that I moved to that got started by an individual that was also at that company. Then I started my own. At the same time, I was still very interested in the actual investing side of it, but I didn't really know what I was doing. I was buying a lot of stuff. I bought a house to live in. I made about 200 grand on that tax free because I ultimately sold it after living in it about 3 years. So I did some things along the way that I got a little bit lucky because we're talking, this was 2003 to 2006. And it was pretty hard to lose during that time,
Right.
just with where the market ran up. And so looking back, it was pretty fortuitous of me to sell at the time that I did with that. And then there was a duplex that I bought that was just, I was a complete slumlord, and I had no business buying this duplex up in Vancouver. But I bought that and sold it and made about 80 grand. And so combined, there was, somewhere between $260,000 and $280,000 in money that I made that year in 2006, just purely on real estate selling, on top of my, loan commissions. And so that was the point where I was like, you know what? I got to do a lot more work on this loan stuff to make a lot less money. And so that's when I started to turn the ship, at least in my mind, in terms of where my focus was. What I didn't realize is that our market collapse was going to start sometime in August 2007 when all of the wholesale mortgage companies decided they were going to freeze the pipelines. And that then trickled down to, deals falling out of escrow and ultimately a ton of short sales and REOs and, the real estate collapse that we had of 2008, 9. Some markets went into 10 and 11. And so that was kind of put it on hold a little bit as I was trying to pick up the pieces and figure things out. But by the end of 2008, I had kind of regrouped. I had my own mortgage company at that point that we were still doing a few mortgages. But I decided at that point that I wanted to go full bore into the world of real estate investing. And at that point, there was a lot of short sales going on. There was a lot of auction buying going on. And there was a lot of REOs that were starting to hit the market. And so we started buying a lot of REOs and short sales. And then eventually we started doing a fair bit of bidding down at the auction. And so, late 2008, beginning of 2009 is when I went full time into creating what is now TTM Development Company. Our 10-year anniversary was actually this past month. But that's when we, changed the heading of the ship. And we started buying REO, short sales, auction foreclosures, and renovating them, putting them back on the market. And that's how it started.
So you started focused on flips, basically.
Yes. Yeah. Well, no, I'll take that back. On the run up, 2005, 6, I sold 2 properties during that time that were big wins. There were a couple other smaller wins that I had, but those were the more notable ones. But I bought a handful of rentals during that time period. And so I started actually as kind of doing, like a live-in flip and another big flip and a couple little like turn and burns. But I bought 6 or 7 rentals during that period as well. Mm-hmm. So it was kind of a combination of both. But then heading out of the real estate collapse, I wasn't buying any rentals. I was just simply turning and burning and trying to figure out how to make as much money as I could.
Did you get burned at all during the downturn?
I escaped with a couple deed and lieu's on my record, all
nice.
being completely honest. But that was the extent of it. There was some properties that I sold pre like crash and kind of beat the market down with price a little bit and dumped them. But I ended up holding a couple that ended up being deed and lieu's. So in all honesty, that's where I ended up.
That's a badge of honor right there. That's right.
Yeah.
So what percentage of your business these days is, we'll call it residential remodel or versus, flips versus new construction? I know you're the man. I actually have family down there. I need to come hang out with you. My family lives in Wilsonville.
Right? Yes.
Yeah. Right off Newport Road out that way.
Okay.
Nice, awesome spot out there. I love it. We just absolutely love hanging out over there.
Wilsonville is an interesting town. It's changed a lot in the last 10 to 15 years,
yeah,
for sure. But as far as your question goes, It's varied. It's been kind of a moving target over the last 5 years. We'll call it, or actually, our first new construction project was 2011. So we started obviously just doing renovations. We ended up buying a house at one point that we were going to renovate, but it had what they call blue clay under the foundation. And so the foundation was almost rainbowing. So on one side of the house, it was sagging, and on the other side of the house, it was sagging. And so it had this really weird feeling when you walked in. You almost had vertigo. And the only way to fix it was going to be to put like 30 piers in the ground to kind of jack up the foundation and re-support it so it wouldn't sink or sag again. And this was 2011, end of 2010, beginning of 2011. And I thought to myself, there's no way that I'm going to be able to sell a house with like 30 piers in the ground in that market, because it was still, it wasn't a roaring hot market in 2011 by any means.
Right.
And so that would have been a questionable retail exit. And so I said, fuck it, let's tear the place down and we'll build our first new build. And it was right across a major thoroughfare from a high dollar area. And so it had two layers of risk to it. One was we had never built ground up new construction to that point. We'd come close, but that was, going to be full bore. Number two was it was in an area where price points hadn't been proofed for new construction to be able to get a number that makes it make sense yet. And
Right.
so we had these two layers of risk, but I said, screw it, let's do it. And we ended up doing it. I think we ended up making about 90 grand on that house.
What's interesting about that is I wonder how long it would have been for you to jump in the new construction, which you're obviously the man at now, if that wouldn't have happened, right? Or I wonder if you wouldn't have lost that opportunity at Merrill Lynch, right? I have a similar story. I worked for 16 years for a major developer, living big, and ended up, I won't talk about it too much, having a change there in 2009. And then I was like 1 millisecond away from going to work for Vulcan Real Estate, Paul Allen's real estate company. I was going to run the whole Amazon campus stuff when they were getting ready to buy and build all that stuff. And the guy, I had started a startup myself during that time. And they asked me one question, and they were more interested in asking me about my startup, which was a real estate startup. And they said, you're too entrepreneurial. 300 people applied, got down to me and one other person. And I didn't get it because I had started a startup, a real estate-based startup, and they thought that I would be bored there.
You know what? It's interesting you say that, because I think in the interview process with Merrill Lynch, I also had a clothing company when I was in college called Syndicate Apparel. And so I had dabbled in the world of entrepreneurship, and, we had people all over campus wearing our stuff. And I'm sure that I probably brought that up in the interview process, and that might've been a red flag too, now that you say that. So,
yeah. Right.
Yeah.
Too big of an entrepreneur. It's interesting.
Yeah. But it's interesting, the forks in the road and the way life takes you.
For sure. Do you guys do any deals in Washington, or strictly?
We have, and we do. We're not doing any at the moment. That one duplex that I mentioned was over the bridge in Vancouver. We've done a few flips, some wholesale stuff in Camas, a few rehabs in Vancouver. We try and stay very local now. We used to, back in 2010, 11, 12, we were really kind of all over the city because we were buying a lot of, at that point, REOs and auction and short sales were still kind of around pretty heavily. And so we couldn't dictate where they popped up or where those opportunities were. So we were all over the place, including Vancouver. But from 2013 on, we really dialed it in and took our marketing and our business model to kind of the exact areas that we want to be. And we don't really deviate from that much in terms of our marketing. So we don't now do too much. If we have something that comes across our desk that looks good, we may take it down and flip it out, but we don't do any active marketing over the bridge at this point.
Nice. It's kind of you almost get spoiled. I have the same things where I feel like once you get to a certain kind of level of success, I think everybody thinks they need to blanket the market when they get started. I got to get a deal anywhere I can or do whatever I can. But once you get spoiled a little bit with some momentum and success, it really turns out that if you actually focus in more on the niche area, that you have more success. I found that to be the case, right? Rather than getting more niche about it, which I think is one of the topics that you talk about, rather than being so broad. I mean, I hear you that when there's REOs and short sales, you can't dictate where they're at, but interesting topic all by itself. Do you guys do any like design, build, or remodel for retail clients, or do you just work for your own book?
So my wife used to do that for a big builder before she came to work with me in the end of 2009 when they laid her off. And it's not a business that I have any interest in, to be honest with you. You're basically doing grown-up babysitting and emotion management for people, and that's not that would not be fun. That would make me not like real estate. So yeah, we don't touch anything that has to do with like an outside client and doing custom builds or anything like that for them. We've done like we built in the Street of Dreams in 2013 here in Portland, and pretty much all the other builders that were in that show, they do it to build for a client, and then they use that platform to find many other clients over the course of the next year to build homes for. We used it simply to build our high-end brand and create some brand awareness. But it's almost like we were running two entirely different businesses as we were going to meetings with these guys and talking to them. And I mean, we might as well have been on different planets, to be honest with you, because they're such different businesses.
I hear you. You know what, guys? I got to do something. Joe, I need you to talk to Tucker for 1 second. Hey, Tucker, talk about the real life situation here. And we're talking about, are you effing up your kids with, success and all that stuff, right? My kid's school is calling me right now while we're on the phone. So I'm going to let you guys talk for 10 seconds and I'll be right back. Let me just see what's up. I just want to make sure somebody didn't bang their head or something like that.
You do it.
For just a second there. I'll be right back.
Yeah, absolutely. So let's hear about, what do you think as an entrepreneur with your kids growing up right now? Do you think that's positive or negative, or what do you think?
I mean, obviously we were talking before we were recording. You don't have kids yet, and before I had kids, I was just universally didn't really care for anybody else's kids. So, which is normal, I think, right? Because you're not in tune with just, I don't know, you don't have to deal with kid stuff. So it kind of, I still remember, like I flew first class one time before I had kids, and these people showed up and they had like 3 or 4 kids they brought with them and sat in first class. And I was like, oh, these sons of bitches, what are they doing? And but now I'm that guy that I've done that. So I've grown as a person, we'll say. But I guess to get, address your question and kind of address the topic overall, I think that the biggest issue that we have, number one, is real estate. You can be really successful. You can make a lot of money. And so I think a lot of people, when they start to make a lot of money, whether it be real estate or otherwise, they look at their kids as an extension of themselves. And so if they can do all these things and buy all these things for their kids, in my show this week, I talk a lot about, when your kid turns 16, like, what do you do for them? I see a lot of parents go buy brand new cars for their kids when they turn 16. And I just feel like that's the absolute worst thing you could ever do for your kid. Not only in terms of, at that moment in time, but for the rest of their life as well. And so I feel like when you become successful, what you should give your kids is the roadmap to becoming successful, and not the physical, wants that people have in terms of, cars and clothes and shoes and vacations and, all those types of things.
Word.
Yeah, absolutely.
Speaking of, I'm back, guys. Woo. Thank you for that, guys. Sorry, Addison. I have twins, like I said, 10-year-old girls. And Addison just got whacked with a basketball in the head really hard at recess here. So Miss Q, our local office manager there at school, is called to just let me know that she's okay, but that she did get whacked in the head. They're just keeping an eye on her so she's doesn't get dizzy or something like that. But man, whenever I see, I don't know how, you might not be there yet, Tucker, but whenever I see Miss Q, who's our person that would call us if there's a problem, ring on my phone, I go straight to panic,
Yeah, I hear you. My second kid, I call him durable because he runs into everything. And I was actually pushing. It's a funny story. I took him to the grocery store with me the other night, and he's got like the Jim Carrey chip tooth. He had a black eye at that night because he bashed his head on our mud bench. And so I'm pushing him in the cart, and I see this woman coming towards me, and he's got his head turned, and he's looking at her, and she's got this little Kindercare shirt on, and I'm like, oh crap.
Yeah.
He's definitely looking at me and judging me, like, is this guy beating his kid? Like, I
Right.
don't know. And no, I don't beat my kids, but he's durable. So yes, I know what you're talking about there. He bangs his head at least once a day, sometimes bad enough to leave a mark, and other times he chips his teeth, and that's just the way it is.
Yep. Yep. Well, the good thing, I have girls, and girls are less. I mean, I have a lot of friends that only have boys, and definitely the girls are. We don't have that issue, but we do have, like, I got a bruise on my leg, and now we have to talk about it every day for a week because it's so traumatic and things like that. That kind of stuff. But well, let's get back to it here. I was going to ask you: do you guys build any townhomes, or do you do multifamily construction at all, or you want to do that?
Yeah, we've done townhomes, and it's been a very lucrative model. It's definitely something that we will continue to do as opportunities present itself. As we were talking before we recorded, it seems everybody's a multifamily investor these days.
Right.
So we've I've personally kind of pumped the brakes on the multifamily thing until I see how the market shakes out over the next 12 to 18 months before we pursue any at least big opportunities on ground up stuff. We are looking at a number of buy and improve and create margin of existing construction kind of mid-level stuff. We're talking
Awesome.
12 to 15 units, kind of not the big boy stuff, but not the fourplex, house hack type stuff either. So, that's what we're looking at. The problem is that it's so expensive to build right now. I know Seattle is ridiculous.
Yes.
And Portland it's way out of whack too, especially compared to what our end prices are. So it's tough if you've got to go ground up because your cost to build is so high. So if we're going to get into the multi-space, and we are doing a lot of marketing to it, it's to the existing stuff where we can buy from kind of older mom and pop type owners or heirs that inherited it, and it gets step up value and they don't have to pay the taxes anymore. And then we can take it from mom and pop ownership to more professional type ownership and do the updates and upgrades and create some margin for ourselves that way. So that's how
that was my entire MO for 16 years. In fact, right in your back yard there, while I was pregnant and right after my kids were born, I did that exact thing in Tualatin. It's called the Park at Tualatin. Big, like 200 unit property, totally renovated all the units, put in washer dryers, redid the clubhouse. And I did all that right when my kids were born, made an absolute killing on that. I had my partner who was the big boy with the balance sheet. But at that point they were letting me wheel and deal on my own. And that was the last property I picked up before leaving that life, I'll say, behind. I mean, still partners with them on apartments and things like that I've owned for like 15 years or something. But
that's funny. It was 12. So half of my adolescence, I lived in, I like to call it Aloha, Oregon, which is basically Aloha. And then the other half, I moved to Tualatin, and we moved there when, I don't know if you remember this, but they used to have a dog food factory there. And every Thursday they dog food, and it stunk Tualatin up like Longview stinks. And so it's real estate prices there for many, many years. But the dog food factory closed sometime, I think, around 92, something like that. So.
Nice. Awesome.
But that's our strategy with multifamily. We're open to it. And, to be quite honest with you, I need more of it on my personal portfolio balance sheet for depreciation, tax reducing strategy type stuff.
I was going to ask you about that. Do you what do you do? Because it must be painful.
It is. I'm like Jason Bateman in Ozarks with the money that we make.
I just finished season 1, so don't tell me too much. I just finished season 1.
That's how I feel.
Do you know what we're talking about?
I do not. I live in a van.
Yeah, right. Well,
So
if anybody else likes a show to watch at night while you're having your cocktail when your kids are in bed, because they definitely need to be in bed to watch this one. Ozark is, what is it? There's 2 seasons out.
yeah, 2 seasons. So
Oh,
and
man.
they greenlit a third one, I think, from what I read. So yeah.
Hey guys, Joe here. I just want to take this super quick break from the action to let you know something that we have really cool to offer you guys. As you know, marketing is the lifeblood of our real estate business, and Julie and I spend a ton of money sending out postcards and letters to people all around the Seattle area. We've partnered up with YellowLetters.com to get you guys 10% off all of your marketing needs at Yellow Letters. All you have to do is go to YellowLetters.com, and when you check out, use the code Seattle Investors Club, and you'll get 10% off any of your marketing needs at YellowLetters.com. You can send postcards, letters, whatever it may be that YellowLetters.com has, so that you can keep your marketing engine running for a little less money. So go to YellowLetters.com, use the code Seattle Investors Club with no spaces, and get your marketing going today. All right, let's get back to the action.
So let me ask you, do you have like a quick and dirty formula you use to benchmark? We got a lot of people listening that, would love to either wholesale or get into new construction, which is still a major need, lack of inventory. Do you have like a quick benchmark for wholesalers? Let's just assume it's a clean and flat property and it's not, because that adds money if it's, sloped or too far away from hooking up to your utilities. Just a straight over tackle deal. Do you like say, hey, the house is $1 million on the exit. When I get done, I can pay $250,000 for the dirt, 25% or anything like that?
I guess the best neighborhood to kind of quantify that would be an area called First Edition, and we were buying it anywhere between $3 and $350 and selling it $1 million.
Okay.
But they were flat, 5,000 square foot lots, limited tree cutting, very simple excavation, 2,700 square foot, 3-bedroom, 2.5 bath homes. So,
Yeah.
And we were clearing $250 a pop to $300 per house, and we were banging them out, boom, boom, boom. But to kind of circle back, that was a 10 by 10 block area of Lake Oswego, and we did some very condensed marketing in there, and we were just cranking them out one by one by one. And then other builders caught, they noticed what we were doing, and they saw the margins we were making, and overnight a larger company that will remain nameless that likes to do volume on infill around here came in, and they ended up pushing lot prices up above 500,000 now. So we bowed out of there, and we kind of pivoted and went to another area that we're building out of now, and where I personally live. But that would be, we'll call it around 30% of end sale price with a 2,800 square foot simple excavation type lot.
What's the minimum? You like minimum want 20% return on your?
Yeah, we shoot for that for sure. We've had plenty that are closer to 30, but there's a lot of builders. The bigger ones they're building off of 12 to 14%. So there's a lot of
those guys, because they have to keep their crews in, right? I mean, what's their margins? They just part of it. They have to keep going just to keep their people employed, right?
Yeah, I think it's just the Titanic philosophy, right? At a certain point, the Titanic needs gas, right? Regardless of how expensive it is, and so. Right. They just keep going and they just pay what they pay, and it's a volume game for them. And so they look at infill new construction as a volume game, where I look at it as a margin game. So right. we're a little more tactical. We're definitely a smaller operation, and I like it that way. But yeah.
But let me ask you, then when they're making their offers, I mean, I guess maybe they're going to beat you on price, right? But maybe there's some things they can't do because their hands are tied for investor reasons or whatever, on making offers. Is there no way for you to beat those guys on terms at all, or?
Not really. The way we beat them is just we do more direct to seller marketing. That's better marketing, and we just have to have more conversations. So we find the people that are not shopping us with the big builders.
Yeah.
And so that's kind of the weak spot in the fence, that we find those, and those are our best opportunities. It's difficult to say, hey, seller, like there was a deal that we offered on last month that a big builder offered them 900,000. I said I'd pay you 785. Big builder was going to try and split it and put two real tight houses on this lot that ultimately I think are going to be bad retail product homes. But that's what they're going to do because that's their model. I said it needed one big house on there, be a nice Mac Daddy type finished product. And they obviously took their offer over ours. And that happens a lot just because, and whether they're splitting it or they're just going to pay more, it doesn't really matter. They're willing to pay more. So we offer what we offer. We can't do any Jedi mind tricks or any sort of terms or anything like that. We're in such an equity type market here that money talks, so it's
Right.
really about finding the opportunities where we're not pitting money against money. We're just kind of able to build a relationship and create a fair deal in the mind of the seller. And then we fulfill our side of the obligation and they're happy and we're happy.
Are your price points, what are your resale price points up there for a typical new home that you build? Are you in the over $1 million?
For us, yeah, we've got one on the market right now for $1.5 million, and another one for 750,000. So 750 is going to be our low end for new construction for us. And then $1.5 million all the way up, to 2 million plus.
So let me ask you, due to on the higher end ones, 2018 tax reform with the changes in interest deductions and real estate tax limitations on the write-offs, is that going to impact, do you think, your buyer pool?
I think it's starting to, now that people are realizing it. It's a big slap in the face. Is
that causing you some pause on the higher end stuff?
It is at this moment, although I don't know if that's the sole reason. We've looked at numbers pretty intensely, and from what we can tell, we've had a 10% peak to trough adjustment this year alone, even though the headlines won't say that, and the world of realtors won't admit that. But if we had listed the same property in April of this year versus today, right now, there's probably a 10% difference in the price that you're going to get, all things being equal.
We're in the exact same boat in Seattle, same number,
Yeah. And there's actually a number of other markets that have that same number as well. Now, the positive thing is that market is absorbing at that trough price point. So that's the positive. But I knew this had to happen. It was just when it was going to happen. I honestly thought it was going to happen a year ago, and I was a year early. So,
you know what? I agree with you. I think that we'll have, I'll call it the soft landing here, hopefully. We'll find out here in the next month or two as we kick off the new year. I think quickly. I think we're gonna have an indication quickly if we've hit that soft landing at 10%. But what I think is that there's a lot of dumb brokers out there and people that will let sellers dictate to them what prices, and they're going to list too high, and then everyone's going to say, oh, there's so many days on market, where it's going to be because brokers are listing stuff wrong because you have sellers still pushing them on price a little bit. So I think we're going to have some bouncing around, and that just the brokers themselves are going to affect the read, I'd say, on the market a little bit, on how they present and list the properties is going to have, some play a little bit in this. It'll be interesting to see what happens. But do you have a forecast, a market prediction? I'm sure you guys study some data.
First off, I completely agree with you on the agent thing. Most agents, and it's not a knock on agents, but it's just the reality is that they're going to tell sellers what they want to hear in order to solidify a relationship via listing contract, right? And so sometimes those sellers, or a lot of times those sellers, are behind the times on terms of where the market really is at versus what their expectations are. And there's a lot of opportunity for us as investors when the market is getting better and they still think it's in the shit tank. And there's a lot of challenges when they think it's great and the market has softened, right? And so we're in that challenges time period where the market has softened and a lot of sellers still think it's great. So brokers run into the challenge. We as investors run into the challenge when we talk to people also. But yeah, there's going to be a lot of stagnant inventory. And ultimately, there's going to be a lot of disgruntled sellers that price too high. And they'll come down and maybe they'll expire and they won't sell, or they'll decide not to, or whatever, or others will adjust price down to the point that they sell and they'll still be disgruntled about it. But, the reality is the market's the market, and whoever lists your property, there's only so much, deviation from true market value that broker is going to be able to get for you.
I'll say to you guys all listening, a really, really great question that you should have on your call sheets or whatever these days is, when you find the right time, you should ask the seller, what do you think about the current market? Have you, are you aware of some of the adjustments that are happening in the market? And let them, see if they get some indication whether or not they're level-headed, reasonable, or if they're going to be one of those, no, I'm only going to sell it if I get this number. Just simply by finding a way to ask that question while you're on the phone, right? So it helps you prepare better for your appointments and stuff like that. And being both a broker and an investor, I don't know about, do you guys list your own stuff, or do you hire somebody you have?
No, we list in-house. We have an arrangement set up, so we basically have a net branch under a larger brokerage, but we operate under a DBA, so we keep the TTM brand. So we did that a number of years back. It also caps my selling costs and keeps them rather low. But I have kind of a different type of company structure where my office manager and our acquisitions manager is also our listing agent. So even though he doesn't get full commissions on the sell side, it's some upward mobility for his own income versus just being an acquisitions guy. So it works out. It's a win-win for both of us.
Absolutely.
In that regard. But
what do you guys do when you go to appointments and you're apart on price? Do you guys go ahead and list those, or do you convert them?
No, we don't. We have for a long time tried to figure out what the best way is to deal with those. And ultimately, we have determined that it has to be, in order to convert the highest percentage of those, there has to be a direct handoff. And that handoff most likely needs to be in-house to get a large percentage.
So that's my MO. Totally.
Yeah.
I am broker investor. I don't care what that's my specialty is wearing those hats, right?
Yeah.
Both.
And that's a good skill set. It's a very good
awesome. It is. And it's actually a coaching program that we're thinking about launching as well, kind of a niche there, because it is a specialty and there's some nuances to it. Of course, if you want to play by the rules, which everybody should. But I'll tell you that it does not work most of the time for any wholesaler or anybody else to hand off and say, oh, it's not for me, but let me introduce you to my agent. That doesn't work. It has to be on the same team in the same conversation.
Yep.
For those of you who are wondering, if you figured out how to make it work, let me know. But, you're still about relationships. And so inserting some brand new person in there that they've never heard of is just not part of the rapport building process, right?
Yeah, that's what we found too. After years and years of trying to figure this out, just shooting from the hip. But yeah, they call you for one type of service, and so to pivot them to an outside party for a different type of service, it's just it's a difficult uphill battle to do. So yeah,
but I will tell you guys, it is very easy to convert wholesale deals to listings when you know what to do and say and when to switch hats and how to do it. It's very easy. And for those of you who are wholesaling and think you're just wholesaling and you're spending all your money marketing, you guys have all heard me say it a million times, get your damn real estate license. I mean, first of all, you could potentially get in trouble because you're probably wholesaling illegally wrong. And why would you spend any money marketing when you can't capitalize and can, make money off every lead? You guys are welcome, of course, to always hit me up. I'm working on something as far as coaching goes that for you guys. But in the meantime, Julie at SeattleInvestorsClub.com if you have any questions on that sort of thing. So let's transition into tell us about the Deal Finders Academy, which is badass. And also you have Deal Finders Academy Launchpad, which is maybe the starter version. Let us know. Tell us about that.
Yeah, so the DFA is basically what we call it for the original mastermind group. It's essentially a mastermind group that's affordable, but it's been a conglomeration of, we'll call it our biggest listeners over the years that are also the most active in the world of real estate investing. And so we've got about 125-ish people, give or take, from virtually every major metro market across the country that are very active, that do this day in and day out. And it's just a great platform to have real honest conversations about tactical stuff, transactional stuff, marketing, deal structure, whatever it is, on kind of a virtual level. And so there's a lot of more expensive masterminds out there that have a lot more face-to-face type stuff, which is great. But we wanted to build something that was essentially create a business partner for you without taking half your money and allowing you to be able to have these daily interactions with people virtually. And so it's been 4+ years now that we've had it in place. And it's been an awesome opportunity for me more than anything. Obviously we make money on it, which, it is what it is. We organized it and put it all together. But more importantly than that, I've met some amazing people through it. And, a lot of our members are original members from 4 years ago. So is
it a web-based, are there like webinar trainings, or what's the format on it?
So we have monthly webinar trainings we now do Facebook Live, so they're more interactive. And that's basic, Facebook's the center of the universe for a lot of people in terms of being able to connect. So we have a private Facebook group, and that's where the majority of the interaction goes on. We have a membership site as well, where we store all of our marketing material and just anything that has to do with proprietary type stuff for direct seller marketing or anything deal related. That's kind of the back end holding tank, but most of the interaction happens via our private Facebook group. And then we have an annual event where we put on for everybody once a year here in Portland, where they can come and we can kind of hang out face to face for 2 or 3 days. We actually go check out a number of our projects. This past August, we had one where basically we had an in-classroom day where we just kind of did a mastermind hot seat session. And then day 2, we brought in a modular home builder and basically got the skinny on, how you can use modular moving forward. And then we went out in the field and we looked at all of our stick built stuff that we're building on site. So we kind of do all kinds of stuff, but really it's like a daily interaction virtually with an annual event.
You have people from out of town roll into your annual event?
Oh yeah. We have people from all over the country, all the way from Boston to Miami to Texas to everywhere. So
is it more based for builders or flip or everything?
Everything. There's guys in there that, one of our members, a good friend of mine who builds a ton of multifamily in Hollywood. Another one that you probably know up in Seattle area builds really nice high-end homes. Another one is in Boston, does 3-family, 2-family, 4-family stuff in Boston. Some Midwest renovators. Just
Cool.
It really the common bond is that they do this every day. The difference being, maybe some of the construction's multifamily, some of the construction is rehab, some of the construction is new construction, right? But they do this every day and they acquire their projects the same way, which is direct seller type marketing.
Yep. And then what's the launch pad?
It's just more of an entry level type, get you up and running. Just make sure you don't blow a ton of money doing a lot of dumb stuff starting out, as you kind of build your business and get a firm idea of how you should go about starting a real estate investing business, and just kind of steer you clear of shiny ball syndrome, so you don't kind of rabbit hole down the wrong path. And, just for example, like, a lot of people, when they get into the world of direct to seller, they'll buy a list of like 10,000 non-owner occupied, absentee list, and then they'll blast that whole 10,000 with postcards or something, right? And they have no skill sets built up in terms of talking to sellers, knowing how to screen leads, knowing values, and of course they probably don't get a deal from it, especially now with a highly competitive marketplace. And that's all the money they had, and they think that this doesn't work and it was just a big scam or, whatever. But the reality is that they spent way too much money starting out. They mailed, they shouldn't have mailed exclusively to that list. They hadn't built their skill sets in terms of talking to sellers and understanding how you need to take the conversation, even identifying what an opportunity looks like. So it just helps people kind of get on the right track with that type of stuff.
Awesome. And are you, speaking of lists, which is even as experienced as we are, right? We pretty much live off direct mail, a little Facebook marketing here and there, but, it definitely works, right? And always is the refining of the list, right? So like you said, that blanket mail, it works a little bit, but a lot of times it doesn't. You're spending a lot of extra money there. Your own team, do you guys... I use your Driving for Dollars app. Love it. Have a question for you on that in a second. But is that all new investors when they're getting started, when I'm giving them coaching, I tell them the cheapest way and the best way to get started maybe is to pull their own Driving for Dollars list rather than buy some list and blast it out. Do you guys focus more on Driving for Dollars list or do you buy lists or create lists?
95% Driving for Dollars. Chris, my office manager, went out yesterday. He got another 250 in a farm area that we wanted to expand to. So we do it on a weekly basis using the app.
Do you run out of places though? I mean, if you're trying to stick within a certain zone, do you?
Not really. I mean, we've had to expand, but we're like, when I say expand, like we expand to different parts of Southwest Portland. We expand a little farther past Southeast to Milwaukee and Gladstone. But, every time he goes out, we're looking for an additional 200 to 300 properties, right? So it's not a huge number. And I'm sending him in pretty densely populated areas. So it's not like he's driving miles and miles and miles before, in between leads. Right. So yeah, we've expanded a little bit, but we have to because there's just so much competition. So we used to be able to focus purely on just a 10 by 10 block area, right? And build and just do deal after deal after deal. But, with all the competition that there's been over the last couple of years, we've had to expand a little bit. That's not to say that we go over the bridge now, but we've had to expand more than we used to.
Do you have success once you're in the neighborhood building a project? Do you have like a system? I'm going to go talk to all the neighbors, hit up all the houses, not just with my direct mail, but now I'm here. They can see me. I'm going to go get the deals that are around here now that we have some credibility, right, in this spot.
Yeah, I look at it as kind of, planting your flag in the ground and kind of, there was this funny Seinfeld episode. I don't know if you remember back in the day where like George carried around this picture of this hot girl in his wallet that he said that was his girlfriend. And he used that to talk to other hot girls. And he's like, I'm safe. You can talk to me, right? And so I look at, I know it's a strange correlation, but same way, right? Like once you're in a neighborhood and you're doing a project, you can go talk to people and you're safe, right? You're not some weirdo that's mailing them or trying to get in contact with them that doesn't have a presence there. And so we leverage the hell out of that. And I
know our buddy Jared Holland. You guys all know Jared. What's up, Jared? He kills it on that model when he's there. He really does.
Yeah, and that's one of the reasons why we've really focused on building out our TTM brand so strong here in Portland too. Because whenever we start a project, signs go up and, we mail everybody right around it. We, talk to everybody that, if we identify other properties on the street, we're trying to make a point to connect with them at some point during the project. So yeah, we do that a ton.
Do you guys, once you pull, I assume, do you use your own app, right, to pull your lists, I assume, when you're doing your Driving for Dollars?
We do. So we basically, we pull the information on owner address and then also phone number. And so we use kind of a combination of those two things to do marketing to them.
Do you guys, because I use your app as well, do you guys, well, for one, is there any way you can add parcel numbers on there?
So I'll let you know something that I haven't told anybody.
You're about to tell everybody.
Yeah, I know. I'm about to tell everybody. I just got the news this morning. We've been testing a new API, which is basically, we'll call it a way to transport data to your phone via a new data provider, which is basically TLO quality data to the app, which will have a whole ton of additional information on each property that will be implemented by end of year. And so it's basically
End of this year?
Yep.
Ooh.
Yeah, we're hitting it hot and heavy, and we're getting it done. And so we basically we're working on getting the new APA wired up and the new data contract signed and sealed. But it's TLO quality data along with a variety of other data points that could be useful for any type of marketing or otherwise. And so that very well may be one of them.
I just got butterflies in my tummy.
Yeah.
For you guys don't know what TLO is, that's what TransUnion. It's really a skip trace type, high level skip trace.
The problem with them is they will not allow outside APIs to tap their information because they're worried about it, being used for the wrong reasons.
Right.
Fortunately, there's now a competitor out there that is willing to allow outside APIs, and they're really excited about the fact that we have a technology that could expand their user base, and we're excited to use their data. So,
okay, well, that all of you, it's a no-brainer. If you're listening to this and you don't have the Driving for Dollars app, for God's sakes, if there's one thing you do right today, go get that app on your phone. Joe's going to put a link to it at the bottom of the podcast. As well as a link to Tucker's Real Deals podcast and Deal Finders Academy, all that stuff will be in links at the bottom of the podcast. But do you scrub, just now I'm asking for my own purposes, do you scrub your list once you pull it, your Driving for Dollars? Do you do any further scrub or you just mail it out? You take off the no mail ones?
We generally just mail. And then we scrub as calls come in. We could scrub ahead of time, but I've just taken the approach that we'll scrub as the calls come in.
How much is your roll-up list? Do you mail your whole, the guy got a couple hundred this week. I imagine you guys have been doing that for a while. Do you mail your entire roll-up list or do you mail X amount per week?
We break them off into little chunks. And so we'll basically run through, we'll hit certain areas harder than others, and then we'll go back to the others, and then we'll hit those areas hard for a while, then we'll go back to the others. So we bounce around, but we generally try and do at least a 2 to 3 letter campaign in each area before we leave them alone for a while, and then go back to them again.
Are you doing a mix of letters and postcards or?
We do all letters, but we do all of our fulfillment in-house. We have a handwriting machine, so we do our handwritten stuff, and we do a lot of crazy stuff with our direct mail too. So it allows me to come up with kind of my crazy harebrained marketing direct response ideas and implement them quickly. So,
do you think that your crazy harebrained ideas are heavily weighted, or is it more consistency in continuing to mail them?
I would say both. We've definitely bought a number of very high margin projects based on my crazy harebrained ideas, just because we know because that's why people said that they called us first. So it's really just about either getting the first opportunity or being so consistent that you eventually get an opportunity.
Yep. We definitely are the consistent ones. I can't tell you how many deals that we get just because they say, why? I say, why'd you call us? They go, because you were the one that you kept calling us even when we didn't call you back. You kept contacting us and calling us. We have some of our best deals that are 2 years out, that we were talking to them for 2 years. And once you're into it long enough, that means that you're getting deals all the time, right?
Oh yeah, I mean, and some of them are just long sales cycle, right? I mean, there was a deal that we did earlier this year. I posted in our DFA the lead sheet call log that Chris, our office manager, had, and it was like, I don't know, 2 pages of calls, text messages, voicemails to close, right? And each line on that page is a different call or voicemail or text message that he left them, right? So It's just sometimes the sales cycle is long, sometimes it's short. Most of the time it's long though. That's just the reality of this business, and so you just have to kind of keep nurturing those leads along, and if you nurture enough of them, your pipeline eventually evens out.
And the Deal Finders Academy, does this teach people, or do you share any of your marketing stuff in that, or tips, or I imagine you do something like that?
Yeah, we share everything that we do, all the crazy ideas.
There you go, guys. Boom.
That we've done. We don't layer people directly on top of each other just so that they're not implementing these crazy ideas on top of each other within the markets. So we make sure that if there are people in the same market, they're working different neighborhoods or parts of town. So
Awesome. Well, what's your number one tip on direct mail if you had to say one?
Number one tip. Good buddy of mine named Justin Silverio started a company called Open Letter Marketing, and he used a lot of the ideas that we initially shared in the DFA to build out, I guess, his competitive advantage over a lot of his competitors in terms of the marketing pieces that he sends. And so be different and be often would be my advice to you. And that's what he does.
That's good stuff. Open letter marketing. I think, Tarl, if you guys are listening from the Seattle, we have people listening from all over as well, but you guys might, I think Tarl has introduced open letter marketing, or at least his buddy, what was his friend there, your Vancouver guy? Elliot has come up to Tarl's event, Elliot Smith, and I think he talked about open letter marketing as well, which is just a mail house.
Yep. He does a lot of different types of marketing for people now as well, IP targeting and skip tracing, things like that. But that's kind of the evolution of a lot of these mail houses. So
right. How about CRM? What do you guys use?
Right now, actually, Justin created his own version as well. So we're in the process of getting up and running on that. We also use Infusionsoft because we've got the education side of the business, but they call it Confusionsoft for a reason. So it's a little robust for just simple real estate stuff. So it's essentially a Podio type setup with some, add-ons and, specialty tweaks that we're using now.
Well, if you guys ever have any Infusionsoft questions, my man, Joe Bauer, is Mr. Infusionsoft.
Well, Joe, I need to connect Dan with you because we need Confusionsoft and our app to think together and not apart with all the new stuff that we're putting together. So I'm going to connect you with Dan for that one. So
cool. If I can help, I will.
Yeah, that'd be awesome.
So what do you, Tucker, we're getting close to winding it down here. Excited for the fact that I want to come hang out with you in Portland. What do you think your team can do better? You guys are so dialed. You guys are super smart, chill, laid back, fun guys and gals. What do you guys think you could do better?
What can we do better? Well, we can always build a better mousetrap. I mean, we're always trying to improve. Ideally, moving forward, I'm a little bit in a holding cycle on growth until we get into about next spring, we'll call it, right? Because I want to see if this trough truly is the bottom of the trough and where the market starts to absorb inventory again. And given that's the case, we're going to start expanding into, portfolioing a little more of the existing multifamily type stuff so we can get better at building out our keeper list, we'll call it, or our keeper portfolio.
Offset that taxable income.
Yep. Yeah. So that's where I need to improve. That way I'm not putting myself at, audit risk. I'm doing it legally. So that's probably where I need to improve moving forward. And I know that, and I've said that, on my show a number of times, but that's where kind of our head's at there. We've also got some big stuff planned with the app this next year in terms of making it essentially a skip tracing app in the palm of your hand as well as a Driving for Dollars app. So we want that to be kind of a game changer for all different types of real estate professionals. So we've got some big stuff planned, and that's, if we can execute on that, those are the changes that we want to make. So
I can't wait. What other podcasts besides, hopefully you'll start listening to ours maybe, but what other podcasts do you like to listen to?
Oh, podcasts that I listen to. Let me see here. There's a couple that I've been listening to lately. One is, my man CJ McCollum, who's on the Blazers, he's got one. So I like to listen to basketball.
Yeah, these don't have to be business real estate. This could be
I like it when athletes try and get behind the microphone and watch the transformation of them going from terrible to better to good. So I've been watching that with his, and that's a good show. There's also a cool show. It's called Short Story Long, that Rob Dyrdek's cousin does, and that's kind of a cool interview show
Rob Deerdick from the skateboard dude or whatever.
Yeah. And that's a cool show that is just, he interviews a lot of business type people and just talks about life and business. I don't listen
Rob
to it.
does or somebody else?
His cousin who hosts the show. So that's a cool show that I listen to. There's a variety of others, but I like to listen to a lot of like business type shows, for the most part.
Right on. And you check out at night, get it all off the mind by watching a little Ozark.
Yeah, that. And I ran out of Ozark, so I went on to House of Cards. But
House of Cards. That's next up for me, House of Cards. Did you watch Mad Men?
I have heard it's good, but I have not. That would probably be behind House of Cards because I've heard that's good. Yeah,
Mad Men is a lot of seasons, but it's some good stuff. Okay, last thing, and then we'll let you go. What do you like to do for fun besides work?
Oh, well, I've heard this question asked to people before that are in real estate, and they have terrible answers, and I feel horrible for them because they don't have any hobbies, which is it's a sad place to be, in my opinion. But not to knock them, but if you don't have a hobby, you got to get one because it's just such a better life when you do. But I love to do a lot of things. I play basketball, at least 2 times a week, given my knees can do it. I put in an indoor court at my new house. So that's kind of my passion. I wasn't given the frame to make it to the NBA, but I'm definitely passionate about it. So I play ball probably about 2 to 3 times a week. And that's a great way for me to kind of unwind my brain and not think about anything and really just kind of enjoy, still enjoy team sports as an older guy. I love to get out and play golf when I can. A big avid snowboarder still, as well as long as my knees can take it.
I'm actually headed tomorrow to Whistler for a little moms only. 5 moms headed to Whistler tomorrow. No kids.
Wow.
Yeah.
Yeah, that'll be fun. Well,
you ever seen that movie Bad Moms?
Yes, I have.
I'm not saying that's what it's like, but I don't know why. My mind keeps going into the gutter every time I think about our upcoming trip tomorrow. So,
well, it should be a fun time. And Whistler's great. I actually went there when I was in high school snowboarding, and it was one of the cooler trips that I'd ever been on. So
can't wait.
I'm sure. But yeah, I've got all kinds of stuff. But I've also got 2 little kids. So I've got to balance trying to be a good dad and a good husband on top of taking some personal time. So it's a juggling act.
It'll be fun for you when your kids get older and they're paying attention. So we just had at our school, they have like a raffle every year and they're giving away the spring free trampoline. And one of my proudest moments, I'm just kidding, but one of my girls says to me, Mom, what's going to happen if we win the trampoline? Because we have a big view house with no backyard, kind of all view in the back, but we do have a bigger, nice sized front yard. She said, we'd have to put the trampoline in our front yard. And she said, Mom, do you think that would bring down the value of our home? And I was like, that's my girl. That's my girl.
You'll like this week's podcast then. Yeah.
I will definitely be listening to that on my way back across the water here on the way back to Seattle since I'm sitting here in Bellevue. But awesome stuff, Tucker. We won't keep you anymore. We want to make sure everybody, I'm telling you guys need to go check out all Tucker's stuff. You need to get that Driving for Dollars app like immediately. Don't be a ding dong. It's like a no-brainer. Come on now. I think with tax, it's $22.05 a month. It's $19.95 with the tax. I know.
$19.95, unlimited data, and to be totally honest, we take a loss on most of our members or people that use it because they use the hell out of it. So it's a screaming deal. So.
Oh, well, thank you, because I'm going to be one of those people. If I can do something, I'll give you Joe in return.
There we go. I look at it like the gym membership model, right? There are some people that use it to its absolute fullest potential, and there's other people that barely use it. And so we offset the people that, use it to its absolute fullest potential by those that barely use it. And as long as that happens, then we have a great value for everybody. So
awesome.
Nice.
Well, Tucker, it has been an absolute blast today. Joe, where can they find all the details about all the goodness Tucker brings us?
Yeah, guys. So all you have to do is go to seattleinvestorsclub.com/57. And if you have any questions about anything that's gone on in the show today, you can just drop them down below there in the comments section. And if you would like to give us a review on iTunes, we'd love that as well. Go to seattleinvestorsclub.com/iTunes.
Awesome. Awesome stuff. Well, you guys, I'm going to be, Joe, you're on the road. I'm about to hit the road. Tucker's about to build a road. So
We'll see. Yeah, got to get permits first, which caught your question here. So yeah. Well, I appreciate you guys having me on the show. Great conversation, and I'm glad we got to talk about a little bit of life, a little bit of real estate, and everything in between.
Awesome stuff. All right, you guys, over and out. Have a good one.
See ya.
Thanks for listening to the Seattle Investors Club podcast. If you have questions that you'd like to have answered on the show, shoot us an email at info@seattleinvestorsclub.com. Now go out, take that action, and build that real estate business. Thanks for listening.